Hello, everyone. Welcome to the On Time, On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Well, big tech sell-off yesterday. It's not often you see the Dow in the green and the NASDAQ selling off 2.5%. So, of course, the question of all day yesterday and continuing this morning is, excuse me, what's going on in tech? And is it going to continue? So that's what we're going to talk about today. We're going to pull up the charts of Apple, Tesla, Facebook, Amazon, Palantir, to name a few, and really kind of look at how far these things have crashed. Oh my, they're off a couple percent. So Apple alone, up 80% or so in the past year, and it's time to sell now that it gave back 2, 3, 4%. So we're going to keep a lot of this stuff in focus because people literally have lost their mind in the past day, so they clearly aren't busy enough. But that's what we're going to talk about today. If you're catching us on a replay, thank you for stopping by. Make sure you subscribe, hit the notification bell. If you want to join us live, there's a chat window and a Q&A window off to the side where folks can talk to me and ask questions, and I'll answer for them during the show. And with that, let's go ahead and get started. All right, good morning, everyone. Yes, I just updated the chat window with the longs and shorts of the day. Again, no real long unless it's volatility, but you certainly have some shorts to take a look at. You can almost dart throw a short in tech today, just because everything had, sold off hard yesterday. It's probably going to continue today. Eventually, the buyers will come in, and it will be this huge buy the dip opportunity, and people will complain that they were selling when they should have been buying, but that's kind of what keeps it fun in the investing world. All right, here's our lineup card for today. Make sure you have your chat window and Q&A window set up appropriately. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in today's presentation. Full disclaimer information is available at ototnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. Today, we're still looking at growing our money, even though people are thinking about protecting their money. Every time you have a big sell-off, and I would say over, 1% is really not that big of a deal, but you get to 2% in a day, especially in tech names, which guess what? These things have run up. Many have doubled and tripled. So therefore, these are outside, unless you've trimmed, which, I get heat every time I trim somebody's prize cow, right? Well, unless you've trimmed, these are outsized positions in your portfolio. So, they can be big moves, and it can be eye-watering, especially if you made a lot of money. Maybe you've got a seventh digit out there. Yeah. To think that a portfolio moves $20, $30, $40, $50,000 in a day. Yeah. You got to be able to go, yeah, that's what you get when you have bigger numbers and you make a lot of money. So you can't like slap high fives when the market's going straight up and then be upset when the market does something as natural as drops 2.5%. But anyhow, where the tech sell-off started yesterday, will it continue? I think so. I think it will continue today. Eventually, either later today or early tomorrow, I think the big buyers will come in and start swooping up these stocks on the cheap. Because really, here's kind of how it goes down. People are like, oh my gosh, tech's overvalued. I'm going to take profits. I'm going to take my capital and I'm going to put it elsewhere. And they buy literally, pardon my French, but a bunch of dog shit stocks like, Verizon and, Wells Fargo, and buy some cruise lines and some airlines and go, all right, tech is dead. Growth is dead. It's time for value. And then they watch their paint dry for literally like 4 days. And then tech screams back higher. All the big margins are in growth. That. So stop leaving it to watch it take off again and then have to go, well, gosh darn it, I knew that, lesson learned times 50. You can rotate into value, but why even bother? Because you're going to wish your money was back on the growth side, later on, unless you don't like money or you don't like making, big returns. Then scatter your money everywhere and invest in everything and just be happy, I guess. But so, yeah, I do think it does continue today. It's got a lot of momentum to the downside and the futures are in the red. But, Chairman Powell is going to take the stand today and start talking monetary policy. I'll tell you what he says. I don't have a secret cheat sheet to his testimony. It's going to be, we aren't going to raise interest rates anytime soon. And everybody's going to be like, oh, hey, adults in charge. Powell's in charge. Yellen's back. Yeah, we're going to be fine. And tech will turn around and go back higher. So that's what we're going to talk about today. We're going to talk about what is a correction. A correction is, a sell-off of 10%. Yesterday was 2.5%, and people are losing their minds, like we just had COVID hit again. Remember, we were losing 7% a day. We were stopping out in the first 15 minutes of the market open three times in the month of March last year. That's hardcore selling. 2.5% over the course of a day is nothing unless you're a little bit spoiled. And, daddy market is used to giving me money every day, decides to throw a tantrum and you get all upset about it. So again, we'll look at the chart here in a minute. All right, flow, long, short, open, short, long, all that standard. There's the 6 names we'll take a look at, all names that you've heard of. We'll get into short-term execution. Again, not much really going on long today, but there are some shorts in the room that we'll take a look at. I'm not in love with any of those. I think this is just kind of the market selling off kind of short day. The storylines for those are nothing I'm get excited about. Contingencies and academic resources are standard. So the reason we show this chart every time, because we need to keep things in perspective. Okay, so what does this chart tell you? Look all the way over to the right. See that huge move down where, it's striped down like half the screen? No, you don't see that because it didn't do that. It literally, when you look at yesterday's move compared to like all of these, it is literally irrelevant, right? So keep that in mind. Oh my gosh, we're not hitting off all-time highs. Who cares? The markets, if markets go straight up all the time, you get a bubble. And then the bubble bursts and everybody gets all excited. So let's have down days thrown into there. I mean, look at this down day here back. I know you remember it like yesterday. Oh my gosh, it was September. Who cares? And no, none of us remember this day because it was irrelevant. Well, that was a lot bigger day than yesterday. So was this day and that day and all these other days that we've long forgotten about because they literally don't care, were bigger than yesterday. So don't care. Turn the TV off if you need to. Stop staring at your app if you're getting all excited about it. But yeah, it is literally nothing. Let's go ahead and focus in on the last 5 days. Yep, I mean, it's down, but it could continue. When you really look at, a couple percent move, maybe this was 3-4% off all-time highs. Not a big deal. If you make 80% Apple and it gives back 4% and you're complaining about it, you are so far, failed high school math that I don't even know what to say. So, but let's look at here's our 4 charts we have for today. I do not have these set up. Home Depot did release earnings and crushed earnings and sold off hard. So, there's no common sense in the market. When you have a stay-at-home stock, when you have a adverse weather phenomenon stock, i.e. we have this big, Texas comes in and gets wiped out by the cold. Everybody's got to, go in and fix a bunch of stuff. I bought a chainsaw yesterday. Home Depot literally is an environment where it is going to print money and boom, look at the big sell-off there. That makes no sense. So step back and think this will be a buying opportunity because these things are going to reverse and go back higher. All right, let's take a look at the headlines. We'll go around the world real quick and then we'll take a look at today's headlines. Refresh these real quick. Okay, NASDAQ futures are down, almost 2%. So that's going to be the theme of the day. Nobody's really going to care about anything else. All right, Europe, Germany down 1%. Everywhere else is kind of even. Asia is mixed. Here's our numbers from yesterday. Again, Dow up and the NASDAQ down 2.5%. Just don't normally see that. VIX is on the move higher. So if you do have a piece of that, then you're gonna be happy you did. Bonds are getting the blame for all this. It's a storyline, but it's not correlated. Interest rates to big tech. What are you even talking about? Anyhow, it's fantastic for the storylines, but obviously you have Chairman Powell's testimony today. So I think that will have everybody chill out. Oil above 60, gold and silver selling off a little bit. What's interesting in Bitcoin world, down below 50,000 again, 16% or whatever off of its all-time high. You can get in these kind of funky math things. So at the beginning of February, we bought in and it was at 31,000. Now we can't be like crapping ourselves because it's down to 48,000. So, oh no, I'm only up 50% in the past 3 weeks. I will take that problem every day of the week, right? All right. Back to the headlines and see what's going on. Now, what's interesting is Tesla stock, because they bought $1.5 billion worth of Bitcoin, their stock's actually tied to Bitcoin now, which is kind of funny. And I'm not sure they're going to wish that they had done that, right? Just because, no, is it really? No. Does it affect car production? No. But people are going to mentally tie it to a like Bitcoin alternative. And if they do, then they're going to buy and sell it based off of the price of Bitcoin. So kind of crazy. 2-day losses for Tesla to 14%. Literally, we'll look at the chart. The stock doesn't even belong in the range that it's at now. It should sell off 50% plus. Will it? Probably not. But we'll certainly see. All right, let's see what else. Lucid Motors. This is supposedly a competitor to Tesla. It finally went public through a SPAC deal, which has been all the craze on Reddit and Twitter and stuff with CCIV. And again, finally happened. Stock sells off. Yep, 40%. So there's no way this car can live up to what Tesla's already done. That's an opinion. Maybe I'm wrong. We shall see. But would not touch it with a 10-foot pole, to be honest. Okay, relief bill, it's coming up. I think March 12th or 14th is the kind of the hard deadline for them to get it done. So I think they're finally getting their act together to get something purchased. The market can get nervous about Powell's testimony, but I mean, this guy's been the most steady hand at the wheel forever. So why is the market getting nervous? I don't think that's true. I just think it's a headline. Extends its slide, tumbling below 50K, which you don't really care unless you bought at 58K, right? Wells Fargo getting out of the asset management business. They weren't all that good at it anyway, to be honest. Okay, let's take a look at some of these tech charts and see how much money we have lost in this, sell-off, Techmageddon sell-off. Let's pull up Apple. All right, so yeah, Apple was up at an all-time high of 144. Not a split adjusted all-time high, that is. Up at 144. We had calls in this area. I rolled them up to like 160. One person was so convinced that Apple was going right to 200, they made me move their calls to 200, which is up by my, up here off the screen. Okay, I like the way you think, but just because the stock goes up doesn't mean it's always going to go up. So here we are back at 126 and a little bit of a down move there. So goodness, for the month down 7%, or excuse me, for the week down 7%, month down 8%. For the year though, up 61%. So if you were a year ago and you said, hey, a year from now, Apple's going to be 60% higher, you would literally not care about any of these other numbers, right? Or the road that we took to get there. All you care is we were back here and now we're up here 60% higher. That's how you need to look at things. When you look at the valuation of Apple with the PE ratios, they're not grossly overvalued by any means. If you don't have Apple, you can actually buy some here. I really would be shocked if Apple went below 120. I really would. So, all right, let's take a look at another one. Let's look at that Tesla. Same sort of thing. You get up here at 900, okay? Now it's down to 714. So performance for the year, 297%. Okay, so If somebody told you a year ago, hey, buy some Tesla, you're gonna be up 297%, you wouldn't care that you were up 340%. You literally wouldn't. So don't be greedy. Tesla will fall to wherever it falls. People will start buying it back up and going from there. Palantir is a name that I know a lot of people are wondering what's going on with Palantir land. Well, remember, it started here at 10. So for the quarter, it's up 56%. So these things do come in. All right. Let it come in, let it consolidate, let it go back higher. All right. Let's go over to Schwab real quick, and I will show you all 6 of these names that we're talking about today. What do they all have in common? Well, when you look at them, they've all run up big. I mean, they've made a ton of money. So simple, we don't talk about it much in here, but reversion to the mean. If something makes 60% or 80% or over 100%, it's going to sell off, and it's going to consolidate, and then it's going to make it move higher. It can't just go up, 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 and up, and up, and up forever. If it does, pull a GameStop where it shoots up well past what it's worth, and then it comes crashing back down. So again, you want these things to kind of chill for a bit, establish a new baseline, let the weak hands get out that think the story's played out, and then let the stock actually go higher from there. All right, we'll take a look at the shorts real quick. Shopify got a downgrade, plus they're issuing a bunch of stock. So when you look, it's hard to trade at this price point. But closed at 1381, dropping down to 1275. So pretty significant drop, and I do think it's got plenty of room to go lower, just because it was so overvalued to begin with. It is a loved name though, so it's tough to short into that sometimes. But it could move. It could move lower. Tattooed Chef is a hated name. It's got the volume closed at 21 up in here, all the way down to 2011. This thing's basically fallen off the cliff. That's about a 20% move in the past 3 or 4 days, and continuing to fall. So see no real reason for Tattooed Chef to stop falling. And then a lower volatility play is this ICPT. Intercept Pharma, again, low volume, but again, it's fallen off the cliff as well. All right, let's go over to our TD Ameritrade and get set up. We've got Shop here, Tattooed Chef here, and ICPT all the way to the right, ICPT. Welcome everyone to the On Time On Target play of the day. Stand by for the opening bell in about 5 seconds. There's the bell. We have 3 shorts for you today. Over on the left screen, we have the S&P 500. It is in the red. Also, the NASDAQ is in a percent over in the red. We have Shopify, which has been got downgraded, selling off pretty hard from 1380 down to 1270. It's kind of a tough point to short, if you will, because you can't buy a whole bunch of shares. Much better is this Tattooed Chef. Again, kind of a hated name. Expecting it to sell off as well. So we'll zoom in on that, looking around a 20-cent stop or so. High of the day set here at 2010. So up to 2015, be in at 1995. That's right now. I'm not really ready to hop into this yet. So I want to watch it for a couple more seconds before we hop into this. I'd rather be a little late than too early on this one. And then you see Intercept Pharma just falling off a cliff over here. This is lower volume, so it's a lot tougher to trade. All right. Looking at 1995 here, plenty of volume. Okay, taking it in 1995. Again, stop is going to be up here at 2015. It's a 20-cent stop, so that's above the high of the day. And again, this is a short. It's kind of bouncing around there, so we'll see how it reacts. Let me get the arrow drawn in here. It is backing up, so just keep an eye on it. Make sure you have your upper stop in. All right, and then the first target's down here off the screen at 1975 or so. All right, let's get zoomed in. Makes my arrow look fat. So it's bouncing off the high of the day, but that's holding. Well, it didn't there. Yeah. As soon as the high of the day doesn't hold, it's going to bust out. So you need to be out of the name. Unfortunately, I bet this goes on to work. But my motto on this, we're not going to turn around and take the same trade over and over. But went all the way up to 2020 is where it peaked out at. So we shall see. All right, let's look at some other names. Let's see. Shopify is not continuing to sell off. The only move you had in ICPT was that initial move, which was enough. That was about a 3-hour move here, but you would have had to take it right at the opening. It'll back up here a little bit as people short cover out of their trades, and then you could see a turnaround and sell off again as well. All right, you see the market kind of heading lower here, 3 straight bars. Let's take a look at some other names that are out there. The VXX. So again, we got into this below 16. It's not screaming higher, but I think that's what you'll continue to see if we do see the market continuing in the red. You should see a nice move into the green out of VXX. All right, get rid of Tattooed Chef. We'll put in Luck and Coffee. Luck and Coffee up, they're down, a couple percent there. And then see what Apple's doing. Just kind of down with the market. CCIV was the Lucid Motors SPAC that we were talking about earlier. Again, down 42%. So if you remember, we got into DraftKings was a SPAC. We bought into that, and once they announced it, it screamed higher. So many people got into this early in anticipation of this Lucid Motors, which I don't think they've actually made a car yet. I mean, they've made a prototype, but they haven't sold a car yet, I don't think. Down 43%. So that's obviously a house of pain if you're in this, and I don't think there's any way to buy this here either. So looks like it's just going to be, look at the volume. That thing's kind of crazy. Millions of shares changing hands there as it continues to sell off. All right, 5 straight minutes down in the overall market. So let's check to see what is, okay, VXX is going up. That's about it. We have REIT, Energy Firm, Coke, Boring Value, Verizon. I mentioned that earlier. Verizon's not a bad stock. I shouldn't say it. It's just a value stock. It is going to do nothing other than pay you the dividend, which, when tech is selling off, you're happy about that. So during, the 3 days of the year that tech sells off, you're happy, but the other 200 trading days a year, you're sitting there watching paint dry while everything else around you is screaming higher. So consider. All right, let's see the House of Pain. Clickstream 31%, Empower 17%, Workhorse 15%, Fubo TV 15%, Neo 12%, Greystone Bitcoin down 12%, CBD 10%, Mind Medicine down 10%, CRISPR Therapeutics down 10%. Again, that's a gene therapy play. Laser, which is one of the big tech firms that's out there, down 10%. Palantir down almost 10%. So there's going to be a lot of blood. Going to be a lot of blood in the market today. All right, let's go over to Investopedia real quick, and I'll kind of close out. What is a correction? Here's why I bring it up. So, a correction is basically, didn't share this out yet. Try again, strike one. There we go. Okay. Correction is commonly called a decline of 10% or more in the price of a security from its most recent peak. So under that analysis, or under that definition, the market is not in a correction. However, some individual names can be in a correction, like Tesla. It's off 10% of its peak, so it's in a correction, while the overall market isn't. So you can see those sorts of things. I will tell you that what I look at as a professional money manager, and then do what you need to do, is the market really needs to move down 5 to 8% before I consider any changes whatsoever. And here's why. Is because if you use less than 5%, you're going to get scared of your own shadow. You're going to be out of names like that, right? Because every time he drops 5%, you're like, crap yourself and go to the sidelines. Well, you end up on the sidelines a lot. And we all know that it's literally, this is a wealth building machine that you put your money in, you move it around and allocate it to best of your ability. But largely the fact that you participated means you're going to be really wealthy over time, even if you don't get the exact plays right. You need to get them kind of right, but you will beat the pants off anybody who just keeps their money in the bank, right? And we all know that. So every time you think about, oh my gosh, the world is ending, and you jump to the sidelines, you're just reducing your odds that you're going to be able to get your money back working for you to take the next ride higher, whenever that is. So that's why I use that 5 to 8%. Below 5%, I don't even consider changes. 5 to 8%, it's like, okay, yeah, we need to make some decisions on, is this the big one or isn't it? Is the big sell-off coming in the market? Right before we release a $1.9 trillion stimulus package? No, we're not. This is not the big sell-off of all time. We have an infrastructure bill that's going to flow in behind that. No, this is not a big sell-off. Where we could see a big sell-off is when we start talking taxes later in the year. But even then, it depends on what they're saying. Right now, the Democrats have proposed a 28% corporate tax rate. That's pretty palatable. It was 35. Trump knocked it down to 20 or 21. Can't remember exactly. If they take it back to 28, that's probably about right, to be honest. Upper tax brackets, if they move those by 1% or 2%, no one's going to care. If you're talking incomes over 400,000, it doesn't affect enough people for everybody to get all excited about it. So really, there's nothing in the news right now that would cause a big sell-off. What would cause a big sell-off? Where I would feel the need to make major changes. Something happens to Biden medically, whether he just straight up dies or he gets really sick. Now there's concern about how much experience the vice president has, running a major operation, right? So there's some concern there that I think that would cause the market to sell off, or another COVID strain, or multiple strains, or the vaccination. It turns out it doesn't work after all, which we would already know that by now, right? So there's theories out there that could take the market down, but you're really not looking. I mean, Powell, I guess, could have Tourette's on the stand today and say that he's raising interest rates regardless. He's not going to do that. I guess he could, but he's not going to do that. So really, what you're seeing now is a temporary sell-off. So albeit ugly, albeit in all of our favorite pet names, selling off 10% plus today. Hold the course. I think if you turn around and you let go of a Palantir, you bought Palantir whenever you bought it. Your theory is that is the new oil, and it's going to be one of the best themes for the next 20 years. So when you look back and go 20 years from now, why the F don't I have Palantir in my portfolio? And you go back through your history and you decided that on February 23rd, you got punched in the mouth and decided that you were going to bail on your entire thesis behind the company of Palantir because you couldn't take the heat on February 23rd because it was down 10%. Cry it out. I mean, literally. So don't leave like thousands of percent on the table because you were all upset because you lost $100 or $1,000 or whatever your portfolio is moving today. I got it. Nobody likes big numbers. And yes, it gets big enough to where your portfolio can drop more than your annual salary. I've seen that happen numerous times. All part of it. It is a big kid game. So when the numbers get big, just hold on. But again, you've made all those gains too. So don't overly freak out on red days. So, all right, that's all I've got for you today. Stay strapped in, hold on. There'll probably be another video out to the masses tonight because phone's gonna be ringing off the hook today. So with that, I'm gonna let you go. You guys have a good one. We'll see you tomorrow.